All right, guys. Welcome. Right, so this is day 22 of this YouTube mentorship. We are gradually coming to an end, and that's been a long ride. So we have about um after today we have about 8 more days and call it a day. That's really been amazing. So we are currently 73% into this wonderful teaching. All right, and so that's it. So now today we're going to talk about a very popular retail concept, but from the smart money perspective, right? The concept of support and resistance, right? But we're going to look at a very unique approach to seeing support and resistance. Some people have been taught that when the market is, when the market is in a kind of um, level, and the price should break this level. So people always see that as what we call a support or a resistance turn support, right? So when the market comes back there, they're looking to buy this, right? So I'm not against this kind of trading, right? But you have to have the logic attached to it to support this kind of trading. So this kind of trading actually plays out when it has this logic. I want to teach you guys. So this kind of logic supports turning resistance and resistance turning support. It's actually a very flawed logic if you don't apply the things I'm going to teach you now. Right? So there's something that we call breaker blocks, right? So this is an ICT concept and something I've used over the years and that's been very worth it. All right, so in this teaching, let's talk about the ICT breaker blocks. All right, so what are breaker blocks, how to identify breaker blocks, and life examples of breaker blocks, right? So breaker blocks are basically characterized by a Judas swing. So you have to understand what a Judas swing is. So for breaker blocks, you have to understand a Judas swing. So for breaker blocks, the key elements of a breaker block is what? The Judas swing. So you must see a Judas swing. So for a breaker block, you must see a Judas swing, right? A false run, right? So this is a key element of it. So for a breaker block, the key element of the breaker block is what? A Judas swing. So what do I mean? A Judas swing is simply a swing in which, like when you see the market do something like this, run this high before dropping. So this run of this high is also referred to as a Judas swing. So Judas swing is simply the market going against retail traders before going the other direction. So this is what we refer to as a Judas swing. So as market does that, we call that what a Judas swing, right? So market running above this high and then dropping. That's what we call a Judas swing. So the market wanted to go down, but the market first of all had to run this before it was breaking down. So now the logic behind this breaker block is that as the market did this, the logic is that somewhere around here that smart money entities got involved inside it. I mean, someone actually bought this market to take out other traders right before doing what? Before the adjusting price. So those are the levels you're looking at. So that level is where we believe that okay, if smart money really bought this market, then smart money would want to mitigate. That means if someone bought here, let's assume that someone bought here, right? The person bought to take out this stuff and then sold it. The person will have two positions running, right? So if I bought down here, my market around these stops and then drop down. My buy will be in what? In loss. Why my sell will be what's in profit. All right. So the market has to come back to this original buy positions to mitigate it and then drop down. So that is the whole idea of breaker blocks. So a breaker blocks simply try to tell us that there are levels in which the market created this kind of setups. So the market should come back to that breaker block level and then reject price, right? So you should come back to that breaker block level and then you see it was a drop down. So we usually like to see this area as our area of interest for our breaker blocks. All right. So that is basically what a breaker block is about. You're looking at that last red candle or the last bearish candle or the last move down before the market went down. That means someone actually bought somewhere inside that area. So you're anticipating that price should come back to this key level and then the market should drop. This is for a bearish scenario. Now, if we are bullish, we are still anticipating the same thing. The market is bullish now. If you see the market do something like this, so they run liquidity and then run high. So it's just the reverse. So for a bullish scenario now, where becomes our index. So now we now have our liquidity sweep down here, right? So have our liquidity sweep down there, and then we have what our breaker level here up here. So this is the level in which someone actually did what the person sold to do what to buy. So now this now becomes our area of interest. So this is what we refer to as a breaker block. So that area level in which the market um came to sweep liquidity, refer to that as what a breaker block. All right, so we try that as a breaker block. So breaker blocks occur on every time frame and every chart, right? So now let me state something. To actually select a breaker block, you have to consider the trend of the market, right? So you have no business looking for breaker blocks when the market is not trending in that direction. That means for you to consider a valid breaker block, you want to make sure that price is in that overall trend. That means you want to be looking for bullish breakers when the market is actually bullish, right? You don't want to be looking for bullish breakers when the market is bearish, or looking for bearish breakers when the market is bullish, right? So this is a bullish breaker because it's what it broke what the stops of the sellers and then there was run higher. So it broke the stops of the buyers and they ran higher. So this is a bullish breaker because it broke early buyers, it broke them down and then ran up. This is bearish because it broke the sellers orders and then ran. So well, market as the market did this, the market is running above this high. What it is that it took out what early sellers, people that were trying to sell here, that's taking them out, and then finally what come back to sell properly. So this is what we refer to as what a breaker block, right? So now, how do you trade breaker blocks? Now, there are two ways to trade breaker blocks. The first way is what we call the aggressive entry. So the aggressive entry simply states that you um you mark the breaker level, you put your limit at the breaker level, and then stop loss above the candle. So you look out for the candle that gives that breaker. Maybe the candle is you put your stops above the high of the breaker candle. That is the first. So you look out for the high of the breaker block candle. So maybe the candle is one here. Look out for the high of the breaker, that's the last down push. So put your stop loss a bit above it. That is the first way to do it. That's the first entry technique for a breaker. The second one is that you can put your stop loss all the way above the high, but the stop loss will be very, very large if you do this way. You can also put your stop loss all the way above this high, like all the way up. Put your stop loss all the way up if that's how you prefer it, right? So some people prefer to put it all the way up, all the way above this high. So we can also do that way if you want to. But my most preferred method is what I wait for lower time frame confirmations, right? So in the next teachings, I'll teach you guys about lower time frame confirmations, right? I'll teach you guys how to. So as we continue, before we end this call, I'll teach you guys about lower time frame confirmation. But just for clarity's sake, you want the market to come back here, and then inside each region, wait for what a bearish break construction. So you can wait for the market to break bearish. So for example, as the market comes into that POI, you wait for the market to break bearish inside that POI. So now this now becomes what your confirmation, right? So you can use it this way. You can wait for the market to give you confirmation before they want to go in short. So confirmation is actually one of the easiest to trade breakers, right? You can use the confirmation or you just use the limit and put your stop loss above what the high of that last down candle or that last bearish candle. Why for a bullish scenario, the same thing, you can simply go long as the open of the candle, or sorry, the close of the candle. You can simply go long here, right? Simply go long, stop loss below, and then you target it higher, right? Or you wait for the market to give you a confirmation, right? Or you can target the low of an imbalance. If you see an imbalance here, you can just put your stop loss below the imbalance. And if there's an imbalance inside this push up, you can put your stop loss below the imbalance. So in case people want to fill it, so you can also just use your imbalance for SL2. So just like if it's an imbalance here, maybe kind of imbalance inside it. So you can just use the imbalance for your stop loss. So maybe there's an imbalance around there. Once your stop loss below the imbalance, so that will also be a very nice one for your stop loss. So that's basically how to trade breaker blocks from the higher time frame perspective, right? So let's look at for live examples now. I don't want this call to be so long so you can get a better feel for what we are doing. All right. So let's look at breaker blocks. All right. Number one, the market must be what in the trend that you're looking at. The market must be trending in the direction that you are anticipating, right? So this is a very clear example of a breaker block. We had two of them. What do we have here? Can you see this? So this, I see this last down push here. So you can see this last down push. What happened? Breaker block. So market actually do what? Ran liquidity. You can see the market running liquidity here. It's around this high, around this, and then what came out to a breaker block level, and then it was dropped down. So if you are playing this breaker block, maybe you are put your stop loss above this swing high. There's a swing high here. This high is above what this last time. So you can put your stop loss above that high there, and then that is beautiful for a breaker. That's a very beautiful breaker. We also had another breaker here. I see this last down push here. Can you see this? Beautiful as well. Market came back to this breaker level. Wow, but market dropped down. So it was always consider the trend of the market before considering breaker blocks. You must consider the trend of the market. The trend is very, very important. Look at another breaker here. It's a last down push for the market run high. So we had this last down push. Market was run higher before market's coming up with that breaker, took out liquidity, and then it was dropped down. So that was actually another breaker level. So these are very, very beautiful setups. You can find them on the charts. All right, very beautiful setups. You can find breakers on your chart to be very nice, right? So the best approach for breakers is to wait for a lower time frame confirmations, right? So that's the best approach. Wait for lower time frame. As markets come there, wait for the lower time frame to give you what a setup. I don't go and trading breakers directly because the market can choose to go ahead. Now, nothing stops this market. Let's now let's look at this really carefully. We have what? We have a supply level here, right? Nothing stops this market from running to this supply level. So that's why you should always wait for what the market to do what to give you what a confirmation on the breaker level. So confirmation makes it very easy for you to trade breaker blocks, and then you have nothing to fear if you have your confirmations, right? So now let's look at a bullish example, the British pounds against the Australian dollars. Let's see if we can see a bullish example of breakers. I want to look for where the market was bullish. Right. So the market load a bit to the past. Yeah, we can look at for looking for bullish examples there. All right. So you can see a very clear example here. What do you have here? You had what this last push up breaker block there. So there's a breaker there. So market pushed down and then what? So that's a breaker block level. Very nice one there. Some other breaker here. See that breaker here. Watch this. This is a breaker block as well. That last up push. Although it did not hold long, the market still came down a bit. All right, so I had this breaker block level here. All right, market came back and then bought it before they were dropping finally. So breaker blocks are very beautiful where you wait for lower time frame confirmations. It's very nice that you wait for a lower time frame confirmation to take your breaker blocks. All right, so you have to wait for the market to give you that lower time frame confirmation. So you can be sure the market wants to move. Not like you do the trade directly, you have to wait for the market to give you confirmation on the breakers. So don't forget that our profit blueprint is still available. If you would like to um, have access to our profit blueprint, it's launching on the 1st of November. That is next month, the 1st of November. If you want to have access to our profit blueprint, just use the link to get at the 50 off for the other price. The original price will be on 10,000 naira, but for now we are giving it out for 5,000 naira. So we want to get our profit blueprint, whether you're funded, whether you're not funded, whether you're as long as you want to enter into the profit space, it's very important that you get that blueprint. Just do as well to use the link in the description to get your profit blueprint. And I will see you guys in the next video.